have to be able to buy stocks for lower prices, well, that dissipates for a little while. And what we look at is most likely into April, a sideways market. And what we have to do as traders is take what the market is giving us. Yes, there could be short-term repo spasms. I expect there will be into April, but we have to take what the market is giving us, not be aggressive to the upside, not be aggressive to the downside, but focusing more on a range-based environment, in my view. Some people might have different views on this. But if you are a range-based trader, if you're a scalper, if you're a person who is looking at volatility, this really is going to be one of the more interesting periods of time in the market, I think, for the next 90 days. And you might have to shift your strategies just a little bit. You also might have to learn new ways to trade. If you were going just straight long calls, long puts, maybe you need to learn how to trade spreads. Maybe you need to learn how to do calendar spreads. Maybe you need to learn how to scalp. That's what we do here. So we're going from 8:45 each day until 4 o'clock. And if you're not a member of TheoTrade, now's the time to do it, because the next 20 days are going to be absolutely critical to set you up for 2026. But also, if this is range-based, which I expect, you need to learn new strategies. So step in with us every single day. Get in the room with us at 9:30 when Don goes live, and then roll with us until 4 o'clock each day. Look, you're going to learn new trading strategies. You're going to learn that there is a lot of opportunity here that you might not know about. And the other thing that we're doing right now is, if you do buy a service, we are going to allow you, if the strategy is different, if you are looking for something different, if you have different risk management strategies, if you find out, hey, this is too aggressive for me, I need to dial it back, or hey, this isn't aggressive enough, you have the opportunity to change your service, work with a different expert, and we're providing that right now through the end of the year. First time that we've ever done that. So check it out, click the link, look more into this, and if you're not a member, get in the room with us. Come on. We have been doing nothing. What did Lloyd Blankfein say? God's work? No, okay, we're not gonna make that reference. All right, let's move into this. Look, cannabis stocks are rolling this morning. Oof, this is going to be a tough one. I'm just going to point this out. If you're trading Tilray and Canopy, this is a day for volume-weighted average price. You're going to see this morning, you look at things like Tilray, T-L-R-Y. Okay, Tilray brands. I don't know how many times people have to be faked out by this stuff, but the reality is this. They're going to change the reclassification to Schedule 3. We've had a little bit of a rally. You have this pop. This is a big move, right? 39%. Today can be very difficult, because what you're going to be tempted to do at 9:30 is just buy it. But that's not how markets work. If somebody bought this a couple of days ago and they knew, and they always know, there's no way that that group down on K Street is not making this trade already. So they bought at 7. They're going to sell you that because they're going to make 50% in a couple of days. Here's what you need to do. Tilray is going to have massive volume today. It's already on the move. It's already seeing relative volume 9.2. So what do? Well, on a day like today, this is very important. Go to Thinkorswim, set up your VWAP. We'll put the link in the chat. Then what you want to do is, if you're not using that, use TradingView. What I want you to do this today with a company like Tilray, which is going to have massive, massive, massive volume, you want to set up volume-weighted average price, have the Bollinger Bands, and anchor to wherever this stock opens or the high of Thursday. That high, that's 6:43 p.m. That's going to be your line of the sand for the day. So 18:43 is what we're looking at. And as you can see, when we pulled this up, 18:43. That is VWAP. So if this pulls back, if this sells off, this is going to be your institutional line in the sand for the day. If it drops under, you can short it. And remember, today is Friday. That means there are options expiring everywhere. All cannabis, whether it's the ETFs, Tilray, Canopy Growth, even names like Altria are going to be in play. So what you're going to look to do is, if we hit this line again, you're looking to go to the upside. If we start to break down, if it becomes a sell the news event, and there's going to be news, there's going to be selling, there's going to be profit taking, you simply manage this trade using the anchor, using what the market is giving you. Now, this is going to be a trend. My expectations are it's just going to burn higher. There's a lot of short interest around cannabis. There's going to be a lot of panic. But don't be shocked to see a squeeze higher and then profit taking. It's not something that you simply just bail on. If you need a recommendation on a company that I would buy on cannabis, it is TruLieve, TRUL. It is a massive insider play. It is a company that dominates the Florida cannabis market. And if I'm going to invest in cannabis, I'm going to do it where all of the crazy people are, Eric. Eric knows what I'm talking about. The state of Florida. All right, Canopy Growth, cannabis ETFs, everything is going to be in play. Use volume-weighted average price. Use the key moving averages today. Don't just blindly chase this. But there's opportunity here, and this is going to be a trend heading into next week. AI showing cracks. Shocker. This is not just about the Fed. Well, it's not about Jerome Powell. It's definitely about concerns around valuation and a lot of people recognizing right now that we are at the top of this liquidity cycle. What's the liquidity cycle, Garrett? It's all of the policy that enables the flow of capital cross-border on about a 4 to 6 year level. This is not astrology. This is money. This is capital that is ebbing and flowing based on global policy. Debt, which is at $338 trillion globally right now, is exponential. It goes like this. It just goes straight up. But the money that is utilized to refinance debt in the global markets is cyclical. And what that means is that it ebbs and it flows in cycles, much like sun cycles, much like agricultural cycles, much like, well, anything that you look at today, you will look back and you'll go, well, that was interesting how the market bottomed out in 2022, 2018, 15, 11, 8, 2. Is that coincidence? No, it's cyclical. And that largely has a lot to do with the way that policy drives the money that is in the system to refinance debt. So as a result of that, we are at the top. We hit the top in November 2021. No coincidence. That was the post-COVID high. We bottomed out in 2022 because we raised interest rates so aggressively. And then we picked back up again. All the central banks globally began to loosen their policy. And now they've run very aggressive, loose policy for the better part of 3.5 years. And now this last mile of the liquidity cycle is happening right now. What does that mean? Well, the Bank of Japan just engaged in $117 billion in stimulus, and the U.S. Federal Reserve has announced that it is going to start buying short-term treasury bills. This is the last pump. I will be shocked if they keep doing this beyond that. Otherwise, if they keep doing it past July, something is so broken that money itself doesn't make sense. Why do we bring up the AI trade? Because it is the top of the cycle, because this is the place where money has been flowing for the better part of 18 to 36 months. And Oracle's earnings trigger huge concerns about the spending. And Broadcom falling despite strong guidance. Nvidia and Micron also weak. Money is rotating into financials, insurers, industrials. The Dow Jones is at an all-time high. This reflects valuation pressure, not the end of the AI trade, but the fact that people are looking around saying, I don't want to be the guy holding the bag on this trade. So they're moving into industrials. They're moving into banks. They're moving into places where, to be very candid, policy will drive a lot of things moving forward. The expectation is that they're going to loosen policy in order to drive more M&A, mergers and acquisitions, in banks. They're going to reduce capital constrictions in the regional and community banking space. And the expectation is, are we going to get stimulus? Probably next summer. And that will focus on infrastructure. We will announce a bill that will be focused on a lot of infrastructure that we will not build. We're really good at that. Most of that money will end up locked up in NGOs. Energy politics, look, this whole situation in Venezuela, I don't know what's going on. This seems like a distraction. But the White House has signaled willingness to seize additional vessels outside of Venezuela. Remember, Venezuela is the largest crude, the largest amount of crude in the ground in the world is in Venezuela. Also, pretty important agricultural choke point, if we actually allowed it. The tanker had hit its location and carried Iranian and Venezuelan crude. And, hey, we're pretty good at tracking flows. Interestingly enough, natural gas prices continuing to move lower. This is a reminder that I called the top on natural gas on Friday and then stupidly did not trade it. Congratulations to Eric from Northport, who made the natural gas trade, as UNG has now fallen another 8% yesterday, and reminding me that, hey, it's all about conviction. If you feel something, make the trade. Don't sit around and go, hey, I called the top on that. You don't have evidence. I don't have receipts. That's the problem. But right now, I am still short the XLE. I am looking for opportunities to continue to short in the natural gas and oil space. And then the next move on this is when all of the panic really builds, and there is panic building. Here's the thing. Watch UNG. Watch the OILU. Oh, man, every time I look at this number, I get upset. Oh. It was a 400% trade that I just missed. All right. I was here. Damn it. All right. Anyway, here's what I'm doing. UNG. I'm waiting for this to move to oversold. We moved to oversold. We're oversold on the hourly. Not there yet. Basically, when it comes to natural gas, the cleanest thing that you can do is look for overbought on RSI and MFI at the same time. RSI, though, typically is the better metric. If we get down to 30 here, I'm going long natural gas. And then I'm going to pray for a lot of cold weather to take over the East Coast. Market structure, new highs, narrow leadership, S&P 500 Dow hitting new record highs. While the NASDAQ has lagged, well, we're going to roll with it. I am not long. Okay. Mark. When have I ever been long upstream energy? I am long pipelines. Big difference. And I'm going to explain that in a minute after we get to the runner. All right. Does not add up. Why deal in drugs when you can control oil pricing? Well, it's the same addiction. That's fair. All right. I know Charlie's asking for the runner. All right, real quick. I want to answer this. Thought Garrett GB was long energy and NG. Okay. There are three elements of the entire energy space. There is the upstream. That is the producers. Those are the drillers. The companies like Transocean that give you the technology to go into the ground. The E&P space. Those are the companies like Devon Energy. Apache. Well, now they're APA. I don't even know. The point is they pull oil out of the ground. Okay. They are subject to the whims of the oil and gas pricing. If they have reserves and the oil prices go down, their stock goes down. If oil prices go up because they own reserves, oil prices go up. Their stock prices can go up. They also focus on efficiency and buying back stock and financial engineering. Fine. My argument and what I focus on and the thing that I actually care about is the pipelines, the midstream, the storage, moving things from one place to the other, moving things from the Permian Basin in Texas to the refineries in Pad 3, which is the Gulf Coast. Refineries are considered downstream. Downstream is where you convert oil into gasoline. You convert it into chemicals. You put it in a ship and you send it to India. The midstream is the pipelines and the storage, and I continue to always argue, as Kent Moores once taught me, there is always money in the midstream because they simply charge you to move oil and gas from one place to the other. That's where I'm bullish, and I'm bullish about it because I don't care what natural gas prices do. I don't care what oil prices do. All I care is they're moving it. It is as close to a toll road as you can get. And once again, once they build the pipeline, it is extremely capital light from there. So I talk about EMO, I talk about energy transfer, I talk about enterprise product partners. But here's the other reason why I like this. I love the fact that when it comes to something like ClearBridge or any of the infrastructure closed-end funds that I invest in, I get a check every month. I don't dividend reinvest that. I get $400, $500 from one fund. I get a couple $100 from another fund. That becomes the cash that I use to trade. So if I'm making 9% on a pipeline company, I don't dividend reinvest it. I take that cash and I trade it. If it doesn't work out, well, I don't worry about the tax issue. But I'm trying to turn a 6 to 8 to 10% dividend yield into a 50% return by trading the cash that I get off of these pipelines. So it's not about being long energy in terms of oil and gas prices. It's about being long the infrastructure that pays me. So there you go. Glenn's on top of it, TYG, EMO, KYT, owning ET. The point is, that's where I get cash to trade. It's a very simple philosophy. All right, CCL. Let's do the runner because I'm 10 minutes behind, but that's okay. I'm dressed like if LL Cool J was Santa Claus. That's what I'm going with right now. That is this outfit. I should wear this to the children in school to scare the hell out of them. CCL. To be very honest with you, it's unbelievable how this market works. CCL, Royal Caribbean, some of these other names in the cruise line space, these are pure momentum stocks. I don't know anybody going on a cruise. And if you are going on a cruise, what are you doing? What are you doing? Just light that money on fire. You're going to get sick. That's a lock. You have this positive crossover on the 8 and the 20-day EMA, and I'll just simply say this. If you want to trade this, you are looking for continued momentum, you speculate up to the $30 level, you go out to January. This is a momentum trade. So how do you handle it? My general view is pretty simple. Sell a spread, and this is a Don trade, I think, and this is a broken, jaded lizard trade. Sell the spread down at the 24-22 level. Go out to January. Sell a spread. Go to a level that it's most likely the stock is not going to hit. Remember, we just hit a bottom when momentum returned on November 24th, 24 to 27. If you sell the spread down here and buy something out of the money around the $29 level for January, it's a speculative move, but you're self-funding that trade. These things move, and they move violently. It is all about momentum. You might try to justify this, and you'll say to yourself, I don't know anybody going on a cruise. I don't either. But as you will find, when it comes to the reading in our momentum, the cruise lines are like the purest form of momentum. You'll say, well, consumer spending is bad and consumer sentiment isn't great. I don't know any. Doesn't matter. It is pure momentum. You're probably better off just trading crypto, but that's going to have a little bit more excess costs. Trade this until we get into RSI MFI overbought and then let it go. But shockingly enough, I will not be overly surprised if Carnival Cruise Line is at 30 by the end of the month. RTX, one of my favorite stocks to sell put spreads on. Why? Well, it's the government. They have funded the government. They're going to continue to fund the government. Momentum is strong. They are providing support. Reminder, core thing about this. The Federal Reserve has effectively guaranteed that they are going to provide capital support to the repo markets through a minimum of April. Now, it doesn't make a whole hell of a lot of sense. Don't think about this too much or else your nose will bleed. You'll hit your head on your desk and they'll find you. The reality is this. Corporations pay taxes in March. That puts stress on the repo market and the banking reserves. That money goes into the Treasury General account that builds through April. But because the banks are, because the banks are under stress, we're going to print money and replace the money that those companies are using to pay taxes. Are you following the logic of this financial system, this circular financial system? Because this doesn't make any sense. They pay taxes, they pull money out of the banks, it goes to the Treasury, and then because there's no money in the banks, the Fed makes money up and puts it back in the bank. Oh, and by the way, most of those corporations, they don't pay their vendors for 40 to 90 days. So it's a leveraged banking system. This doesn't make any sense to me, and I've been studying finance for 20 years. I am super confused. So the big question becomes, well, why pay taxes at all? Why don't they just print the money and replace it? There is an answer for that. It's because taxes actually create demand for the dollar. And if that gives you a headache, nothing else will. If you want to trade RTX, and I highly recommend that you do, RTX at 179, a pretty simple trade is to go back to this guy. That is your 50-day moving average. January 16th, where there is going to again be support from the Federal Reserve pumping money into the system and helping to protect leverage in the system through the repo market. Oh my gosh. Go to January, the 170, 165 put spread. You sell the 170, you buy the 165. It is a 81% probability of profit, a 21% max return on risk, annualized at 220, break even at 169. We would need a breakdown in repo. We would need a breakdown in momentum. And there's not a lot of catalysts that are suggesting that is coming. And once again, I am happy to invest in a company where there is unlimited money being printed because of national defense. 170, 165 put, break even 169, probability of profit 81%, and a 21.7% probability of profit. Okay. Plug, I don't know what's going on here. I got tons of text messages this morning about Plug Power. I don't care, but I'm just going to buy the stock. I'm going to set a tight stop. I'll set it at 220. Something's going on. You've seen very strong momentum moves on this. The stock can squeeze very quickly, 25% short float, buy it, set a 4 or 5% stop. Be willing to lose $15 for the upside of $3.50, even $4 if this squeezes. I don't know why. It is on our list. It came up. So, hey, that's great. Next, to the downside, I am very upset about HIMS. I'm very mad at this company. I thought that their pills worked. But apparently the pills that they sell, they work for different things, not for making their stocks go up. Other things go up, but not the stock. Got a little beat up on this one last week. Went with a relatively safe trade. I was looking for a 60% probability of profit, 60% return. Stock rolled right back over. HIMS breaking down. I'm going to have a hard time trusting this thing again. 32% short float. So it is a heavily shorted stock. I was looking for a squeeze. I was looking for... I'm not going to make any references. You get the joke. Come on. HIMS is trading at the exact same type of trade that RXRX and some of these other names are as well. This is tracking NVIDIA right now. RXRX, I've already taken profits on. We had a 60% return on a trade on that. My dogs are going nuts. I don't know why. That means somebody's at my house. PG, Procter & Gamble, breaking down, continued breakdown on this. Can't have a lot of confidence in the consumer defensive right now. Waiting for that rollover. Stock watch list today, Tilray. Again, I already walked you through. You have to keep a very close eye on what is happening with these cannabis stocks. Volume weighted average price, looking for reversions, using that line in the sand. Broadcom is in focus. And the last one I want you to be paying attention to, but you should always be paying attention, is AIG. AIG is a liquidity metric. AIG is squeezing today because there is rumors that Chubb made an informal takeover approach to them. And now Chubb denies that. It'll be interesting to see how this goes, but AIG, same thing. If there's a lot of volume on this, volume weighted average price, using what the market is giving you, sell spreads that end today, buy things that are based on short duration moves. If you get into that third standard deviation of volume weighted average price, buy and look for a squeeze. All right, so on the vertical RTX, was that buying or selling the put spread? Selling the put spread. Selling the put spread. We are not bearish RTX. We are looking to take advantage of what the market is giving us, and that means we sell a spread. And if we sell a spread, you can look at optionprofitcalculator.com. You can look at what Nick or Swim has. You're looking for a probability of profit around 80%, a 15 to 20% return, and an annualized return of somewhere in the range of 100% or more. And I stress this last thing. Take what this market is giving you. Take what this market is giving you. We are operating in an environment right now where a lot of people are going to spend some time and they're going to complain about the current status of affairs. I think Scott's still sharing his screen. But that said, the key thing right now is that they have already said they're going to provide this support. They're going to do this into April. They're basically putting a put spread on the repo market. There's this old speech that was given about by Tepper, David Tepper. He said this back in 2010, and then he said it again 2-3 years ago. He said the Fed created a put on the equity markets. Well, now they're creating a put on the repo market, and the repo market is where all the leverage is in the system. And why does that matter? If they're going to provide the support, you don't have to chase to the upside. You could take what the market is giving you. You can sell to the person who is going to be very emotional about this current state of affairs and is going to try to aggressively short this market. We have a momentum reading that we utilize. We know when outflows are happening. So right now, instead of trying to chase something, instead of trying to look for the upside, instead of trying to go crazy on things, all we have to do is say, what's the market going to give us? What is the market going to give us? And the market is giving us capital. It's giving us support. So the things that we would be happy to own in the event of a pullback, you've got about a 90-day period to just simply scalp, take what the market gives you, sell put spreads. We'll dig deeper into this today at 3 o'clock. Don is coming back relatively soon. He's going to make fun of this jacket. He's going to say that my music choices were not good, and I'm here for it, and that's okay. So I don't know where we're going with that. All right, we'll go from there. It's 9:22. I'll see you guys at 3 o'clock today. Remember VWAP, and we will go from there. I'm going to go get the flu from a bunch of 8-year-olds, and I will check back relatively soon. Have a great trading day, everybody.